Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny and Bert. The Dividend Diplomats. This one's going to be a fun video today because I don't have an answer to it, but I want to get everybody's opinion. Lanny's included, the community's included here. I have a stock that has at least a $2,800 gain as of today. And the $1,000,000 question I'm asking myself is, do I take the gains and take the money out of the table and sell the stock that has been beaten down for so many years and has suddenly risen up from the ashes like a phoenix?
Ashes like a phoenix. Guys, smash that subscribe button. Give us a thumbs up here. Yeah, this stock has risen just like the Undertaker. Just when you think you finally beat him at WrestleMania, just after you do sweet chin music after sweet chin music, HBK, if you know, you know, guys. And IBM is here at $171.48.
That's
International Business Machines, Bert, IBM.
yeah,
And
I bet you didn't think we were talking about them today.
yeah. Bert, didn't they acquire Red Hat? It was about 5 years ago, 6 years ago now.
Yeah, and it's taken 5 or 6 years for them to return to anything of a productive company since they acquired Red Hat, because that's been IBM's MO over the last 5 years. They have been beaten down. The revenue has been slowing. They have not been able to see any kind of jolt. Their software sales are declining. They've shown some glimmers of hope, some not, but nothing where Mr. Market has given the stock anything. In fact, it's been yielding well over 4.5 to 5% for quite some time until recently when the stock price has run up. They're up 6% year to date. They are up 20.88% over the last 52 weeks. It's been an incredible turnaround for IBM here.
That is incredible. And I just realized too, didn't they also have a spinoff called Kyndryl?
Oh, yeah, that's right. I forget about that. Those little shares that are sitting there in your portfolio, Kyndryl. Yeah, because they were trying to slim down. They've really spent a lot of time trying to rebuild, restructure themselves, not only as that software, but as a major consulting too. Because they have Watson. So it's been trying to figure out how to position
And
Watson.
no, not Deshaun.
Yeah, not Deshaun. I don't even know if the Browns want Deshaun Watson at this point anymore, but at least IBM wants their Watson.
Bert said it.
I said it. I said it. So they've been reshuffling. They've been switching to the cloud base, heavy with Watson. And Lanny, what is the sector that IBM has been trying to corner over the last year with so many different tech companies?
Well, obviously, are we working in an AI bubble right now there's been a chase to AI. You guys know, we all know it. Obviously, there are some big players making noise. You got NVIDIA, you got Intel, you got all the chip makers too racing for AI, not to mention the Microsofts, Apples, and Googles of the world. But IBM is also saying, hey, we'd like to play. Put me in, coach. But Bert, it's interesting because you got a few quotes here from some of the research that you've done and really kind of what angle IBM
Mhm.
has taken with their approach to AI, not really developing it though.
Right. They would be serving more as the consultants. They'd be serving more as the infrastructure that would allow people to play in the AI space. And you're right. Those were some interesting quotes, and we'll put them up there from the article. Saying that they're going to benefit from what was called complicated, messy implementation of AI tools, where companies look to maintain security over their data, which means they can't just put them directly into public AI models. So, in essence, as companies are just trying to build AI, they have no clue what they're doing from building a security infrastructure standpoint. They have no idea how to host. They have no idea how to do anything. They're just going to outsource that to companies like IBM and just pay IBM to let them while they're working on developing what could potentially be their next massive product.
Yeah, very, very interesting. So AI is saying, hey, we're not going to put the upfront costs like all these other players are doing, sinking resources in it, but we're willing to talk at the table. We may not be at the head of the table. Roman Reigns quote, guys. But they want a piece, and they're trying to do it in a way that maybe doesn't take up a lot of overhead because IBM's dividend growth that we'll get into probably would take a little punishment if they developed any more capital than they have right now.
Yeah, that's right. And this has allowed them to really take off. And that's why you see their stock price climbing over the last year. But I also thought it was interesting. Not everybody on Wall Street was overly thrilled about this. Not everyone thinks this is the best approach to it and think they're just benefiting from the AI boom. Because what happens when that risk rocket ship comes back down to Earth? and the funds stop flowing, they're left with their software sales, and their software sales have been dismal over the past few years. So if AI slows down, if there's a bubble, the one that bubble pops, and it might never pop, but chances are it will, just like that fintech bubble was never supposed to pop until one day that funding dried up, and it was a very difficult environment for fintech. Same with startups, same with the VC money working backwards. What happened that the same happens to AI, and you're staring back at the IBM of 2 years ago that everybody was disappointed in?
Well, we don't know yet, guys, but
Yeah,
let's
that's
look and see. Bert's got, sitting on a nice bag right now, an $8,600 by market value, a $2,800 unrealized gain. Let me just take a little peel back to see what am I also sitting on,
yeah.
Bert?
Yeah, so
Am I sitting
while
on?
you're pulling up yours, Laney, I'll give the quick breakdown here. You're right, it's 50 shares total, 8,500, nearly 86, but the thing that sucks is it's among three different accounts, basically split almost evenly in thirds between my taxable account, 16.2 shares, my Roth 18.6, and my wife's account is 15.1. So it's spread pretty evenly amongst the three. So it's not just $8,600 in one account that you could move and invest in a new company. It at least produces $330 of dividend income for us. What about you, Andy? What are you sitting on?
Sitting on a little over 6.2, 6.4, in between that range market value. So sitting on over 40 shares, we'll just say it like that. You're right, produces a decent punch to the dividend income. Did not realize how much they have popped already this year to date. Oh my gosh.
Yeah, isn't that nuts? So let's run them through our screener, which focuses on three metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield.
That bonus metric, guys. All right. So IBM trade at 171.48, as I said earlier, up a little over 6% already in just these few short weeks of 2024, guys. Who
Hmm.
would have thought that we'd be talking about IBM here, as Bert said, in 2024? But analysts are expecting about $9.52 in earnings, P of 18. So not cheap, not expensive. They're kind of where they should be.
Yeah, that's exactly right. Their annual dividend is $6.64. It's a payout ratio of 69.75%, so above our 60% threshold that we're always keeping an eye on.
Now they did make Dividend Aristocrat status, recently over the last couple of years, guys, and the dividend growth has been pretty pathetic. And I mean
Mhm.
it in all seriousness with IBM. IBM used to be the darling of a dividend growth stock because they would buy back a boatload of their shares, which allows them to use a little extra ratio there for their dividend growth. But they do about a penny per share per quarter. So they went from 165 to 166 last year. So they've been on this one penny kick for the better part of 5 years running now. So their 5 year growth rate's about two and a quarter,
Yeah,
2.25%.
yeah. So I mean, they did squeak out to become an aristocrat, barely, just as close as you're going to get to not becoming an aristocrat. They found a way to do it. Um, And with that, with the pop that's come up, their yield has dropped. Remember, I joked around last year they were over 5%. Now their dividend yield is 3.87%. So much lower. That changes the dynamic a little bit here when you're looking at IBM. It even changes even more when you consider their 5-year average yield, which is 5.02%. So they're well under their average yield, which could be a potential sign of overvaluation for the company today because that yield has dropped.
Yep. Yep. The yield has dropped because the stock has popped, in short.
Yeah.
So you guys, they're dealing with again an 18 PE, a 70% payout ratio, two and a quarter, 2.25% growth rate with a yield under 4% now. Bert's sitting on an unrealized gain. I'm probably sitting on a smaller unrealized gain. Man, what are you thinking? What's the decision point, and what else would you might like to see?
Yeah, I mean, it sucks honestly for me that it's spread out amongst three different accounts. So I can't just take the 8,600 and drop it into one. But two of the accounts are traditional accounts, so it's going to cause a taxable event. Um, one is a Roth, so there would be no taxable event if it's sold. There are a few different camps here that I think I could do, Lanny. Number one is nothing. ride the AI boom, see where it goes. That's always an option. Wait. Two is just sell it outright and move it into something, but that's always the $1 million question. With number two is, where do you put that money where you're going to get the bang for your buck? My wife, I could roll it into SCHD, and that would be a pretty comparable yield to where it's standing. So that would be a pretty easy 1-for-1 swap, just giving up a few dollars here for myself. Could put it in AEP, not as high of growth, or you could find my own fund to put it into. I don't know. That's the $1 million question. Or option three is a variant of option two of the sell and put it somewhere else. Sell here, offset the gains by selling a loss in a company like a Walgreens or some other company that is a loss, or a Warner Brothers or a Paramount or something, to cause a no tax event, and then put more money into a different investment. Those are my three options, and I have no idea which one I want to do right now. What are your thoughts, Manny?
Your last option, you buy more.
Yeah, these prices are great. What do you think, Lanny? Just hearing me tell you those three options, what's your gut say?
Oh man. I think what month does IBM usually increase their dividend? Is it April?
Yes, I was going to make a joke about how I wouldn't even constitute that an increase, but you're right. April is the time when they typically do it.
Yeah.
And they're a March dividend payer too.
Yeah. So, I say you give it a few months. You don't have to make a decision right now. I say you know, give it another quarter's earnings plus dividend announcement, see what they do, see what the stock price does. You know, yeah, I would not make any rash decisions with this because it's not tearing down your portfolio. It's not dramatically helping your portfolio. It's like, so
Yeah.
I think it's one that you don't have to like make a quick decision on.
Yeah, that's fair. Patient, wait and see. But honestly, if it keeps running up though, and that PE ratio keeps climbing, this would be a candidate to take money off the table here and just lock in a gain before you know what happens. Like if it hits $200 per share, it might be too tempting not to take money out. So everyone, I'd appreciate your feedback in this. Let me know what your thoughts are. If you're an IBM shareholder, what are you thinking after several tough years? Let us know in that comment section down there below.
Guys, keep saving, keep investing. Let's keep boosting that passive income stream. Let's all ride together to financial freedom. Or any other parting words for the community out there tuning in?
You're not with us, you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats, over and out.